Today, we're diving into the world of investments, and we've got one big name on our radar, Warren Buffett. Yep, the legendary investor who's made quite the splash in the world of finance. So, we all know about Berkshire Hathaway, the company that Warren Buffett steers as the chairman and CEO. Their investment moves are like the talk of the town, and even though Warren isn't the only decision maker anymore, people are still all ears. Warren Buffett's approach to investing. It's like the golden rulebook of simplicity. He likes big, strong companies with solid finances and decent price tags. He's a long-term player, but he's not afraid to shake things up either by making new investments or saying goodbye to old pals. Big shout out to Seeking Alpha for sponsoring our video and its analytics. Make sure to get your 14-day free trial of Seeking Alpha Premium via the link in the description. You can only get the 14-day trial through the link below, so make sure to check them out, guys. Also, if you guys sign up, the commission will help us stay alive, the channel that is. Alright, let's get back to it. Now, let's break down the top 5 stocks in Berkshire Hathaway's portfolio, according to their second quarter 2023 earnings report. First up, we've got the tech titan, Apple. It's like the crown jewel in Berkshire's stock collection, making up a whopping 50% of their portfolio. They've got around $177.6 billion worth of Apple stock, and that's no small potatoes. Buffett started getting cozy with Apple back in 2016, and he's been feeling the love ever since. Moving on to the financial realm, we've got Bank of America. Berkshire Hathaway holds about 8% of the company's portfolio, which translates to roughly $29.6 billion. It's like having a solid friend in the banking world. Then there's American Express, another financial giant. Berkshire's got a stake worth around $26.4 billion, making up about 7.5% of their portfolio. And get this, Buffett's been sipping from the American Express fountain since 1994. Talk about a lasting relationship. Of course, we can't forget about the iconic Coca-Cola. Buffett's a big fan, guzzling down 5 servings a day. And Berkshire's got a $24.1 billion piece of the Coca-Cola pie, making up 6.8% of their portfolio. It's like owning a slice of happiness, right? Last but not least, we've got Chevron, the oil giant. Berkshire's got a stake worth around $19.4 billion, which makes up about 5.5% of their portfolio. Now, Buffett's made it clear, Chevron's not evil in his eyes, even if it's got a role to play in climate change. And remember, Buffett's no spring chicken. He's in his 90s and has been around the investment block for ages. He's even got a succession plan in place, passing on the CEO torch to Greg Abel when the time comes. Alright, so we've talked about the top 5 holdings in Berkshire's portfolio, but what about the other players? Let's break it down. First up, we've got the Kraft Heinz Company, bringing that flavor to the table. Kraft Heinz Ketchup and Warren Buffett go way back. Kraft Heinz Ketchup has been a staple in American households for decades, and its strong partnership with Warren Buffett has only solidified its position as a household name. As one of the world's most successful investors, Buffett recognized the potential of the iconic ketchup brand and invested in its parent company, Kraft Heinz, in 2013. Buffett's endorsement not only brought financial stability to the company but also added a level of trust and credibility among consumers. BNSF Railways, let's dive a little deeper in their business model. BNSF Railways operates as a Class 1 railroad in the United States, providing freight transportation services across a vast network. Their business model revolves around efficiently transporting goods, such as agricultural products, coal, and industrial materials, to various destinations. With a focus on reliability and safety, BNSF Railways aims to offer cost-effective and sustainable transportation solutions, contributing to economic growth and supply chain optimization. For example, BNSF Railways may transport a large quantity of agricultural products, such as grains or produce, from farms in the Midwest to distribution centers on the East Coast. By utilizing their extensive network and efficient transportation methods, they can ensure that the perishable goods reach their destination quickly and in optimal condition. This not only helps farmers and distributors meet consumer demands but also reduces food waste and supports the overall sustainability of the supply chain. Now, let's go back in time for a quick history lesson. Ever wonder where the name Berkshire Hathaway came from? Well, it's a blend of 2 companies, Berkshire Fine Spinning Associates and Hathaway Manufacturing Company. It's like a merger of awesomeness. And get this, Buffett started collecting Berkshire Hathaway shares back in '62, and by 64, he was like, "I'll take the whole company, please." Buffett's investment style is like a secret recipe for success. He's all about snatching up those blue-chip stocks at a good price and holding onto them for the long haul. And you know what? He's all about that teamwork too. He's got his partner in crime, Charlie Munger, who's been by his side since the early days of Berkshire Hathaway. It's like the dynamic duo of investments. What exactly is a blue-chip stock for those new to investing in stocks? Blue-chip stocks are considered to be the most stable and reliable investments in the stock market. These stocks belong to well-established companies with a strong track record of consistent earnings and dividends. Investors often turn to blue-chip stocks during times of economic uncertainty, as they are more likely to withstand market fluctuations and provide steady returns. Additionally, these stocks are often favored by long-term investors seeking to build wealth over time. For example, during the 2008 financial crisis, many investors turned to blue-chip stocks such as Coca-Cola and Johnson & Johnson. Despite the overall market turmoil, these companies continue to generate profits and pay dividends, providing a sense of stability and reassurance to investors. This allowed them to weather the storm better than smaller companies with less established track records. As a result, investors who held on to these blue-chip stocks saw their investments recover and even grow in value over time. A little background on Charlie Munger. Charlie Munger is a renowned American investor and businessman, best known for being the vice chairman of Berkshire Hathaway, where he works closely with Warren Buffett. Born in 1924, Munger's career spans over several decades, during which he has built a reputation for his sharp intellect and insightful investment strategies. His partnership with Buffett has been instrumental in the success of Berkshire Hathaway, and Munger is often praised for his ability to think critically and make rational decisions in the world of finance. One detailed example of Charlie Munger's insightful investment strategies is his decision to invest in Coca-Cola in the 1980s. Despite skepticism from many investors at that time, Munger recognized the enduring popularity and strong brand value of Coca-Cola, leading Berkshire Hathaway to acquire a significant stake in the company. This investment turned out to be highly profitable, as Coca-Cola's stock price increased substantially over the years, generating significant returns for Berkshire Hathaway and its shareholders. While Munger's investment in Coca-Cola may have been profitable, it is important to note that past success does not guarantee future success, and the performance of a single investment does not necessarily reflect the overall effectiveness of his investment strategies. And that is Charlie in a nutshell for you guys. So there you have it, a peek into the rest of Warren Buffett's investment world. It's like a puzzle with all these pieces coming together to create the Berkshire Hathaway masterpiece. Remember, investing isn't a one-size-fits-all deal, so do your own research, and who knows, you might just find your own investment recipe for success. Being a long-term investor means having a patient and disciplined approach towards investing. It involves holding on to investments for an extended period of time, regardless of short-term market fluctuations. Long-term investors focus on the underlying fundamentals of the assets they invest in, rather than reacting to temporary market volatility. This strategy allows them to benefit from the power of compounding and potentially earn higher returns over time. Additionally, long-term investors are more likely to avoid making impulsive decisions based on emotions, as they understand that market fluctuations are a natural part of investing.